Hey guys, welcome back to the channel. In this video, we're going to talk about a potential stock market crash that everyone is blowing YouTube up about. We're going to go over some charts, some technicals, and I'm going to give you my thoughts and opinions moving forward into next week and some things to watch for. But before we do, just to reiterate, not a financial advisor. Make sure that you do your own research before investing. Also, if you find value in today's video, make sure that you smash the thumbs up button, subscribe to the channel if you enjoy our content, and hit the notification bell. That way YouTube can let you know every time we release new content. Okay, so a lot of videos coming out now saying about the stock market crashing and we're coming down. And it's a continuous thing on the news feed for YouTube now, as you get more and more videos that are popping up. And looking at this chart here, they're talking about a 50% crash or a correction of 20%. If we're doing a correction of 20%, well, by the math, we're already about halfway there. Okay, so which is a little concerning because that shows we have some more room for downside. But technically speaking, if you look at these technicals here, we're due for some type of bounce and some type of somewhat recovery, although I don't know exactly when or how much that's going to be. So if you look at the S&P 500, we hit an all-time high yet again of 48.18, and we fell down. We bounced off of that red SMA line, which is a good sign. And then, man, we just got destroyed. We came straight down. I mean, straight down, right off of a cliff, and we busted through three support levels of what we busted down through. Okay, and when we did that, it's basically telling us, hey, we have some more room for downside. Okay, so we busted through 46.29, 45.19, and now 44.30 is, or the three support levels that we busted through. That means now the floor is now 43.42 is what you want to watch for. So that means, yes, we could see some more downside coming into next week. Okay, and a couple of catalysts that we have coming up, I think that's going to have the potential, honestly, to move the entire market. Or one, the Fed. And the Fed talks, I believe, on Wednesday. Okay, they're going to come out and talk, so that's going to have the potential to influence the markets. I think on Monday and Tuesday, I think people freak out and we see more downside and we keep coming straight down. And then if they come out and they are somewhat positive, then that could help recover the markets and start trying to retest some of them support levels that are here. Okay, the other catalyst that's coming up, Tesla also has earnings. All right, and I know that's just one single stock, but honestly, I think that has potential to really influence the markets in a positive or negative direction. Excuse me. So as you see here, we bounced off of about 980. We came up and then we just pulled straight down. Now your next support levels about 900, and I think that we're going to hit there over Monday or Tuesday. I think that we fall down and we hit there and we kind of stay stagnant and see how those earnings call, how the earning call comes out. Okay, and that's going to have a major impact on the overall market as far as how their earnings call comes out. Okay, back looking at the S&P 500, we are right now undervalued. Okay, keep that in mind. So typically when that happens, people start buying back in. But again, people could just be waiting it out until Wednesday or Thursday, and they kind of want to see exactly what happens. One major concerning thing is look how far below we are now, below that red SMA line. We fell like straight down below it. And typically when that happens, you're in basically a bear market, meaning that we're going to keep coming down, and you're not going to be considered back into a bullish market until we get above that red line, and we can bounce off of that and stay above it. Okay, so we have some really major tests coming up this upcoming week. Okay, so I think the things to watch for: Tesla earnings, the Fed speaking on Wednesday, and if we get positive news as far as earnings and Tesla, if we get positive news from the Fed, then I think that we push back up and we retest that red SMA line of 46.52. And if we do see some type of crash, I really feel like we should kind of come up one last time, pop up, and then possibly pull back down. But Monday's going to be interesting, guys. I tell you that, because we come back out and we fall hard, on Monday on the open, and we bust below this 43.42 level, and then you're looking at your next level at 42.15. But currently, from all-time highs as of late, we're down about 8%. Okay, so like I said, if we're looking to see a crash of, or correction they call it, of 20%, which I consider this a correction. This is a major drop in the S&P. Then we're about halfway there, which means we can come down and retest here all the way down to about 4,200 levels, which is going to make some attractive buying opportunities for some of these major growth companies. But I mean, the market's been super overextended for a long time. But typically, every time we fall down and we get this major correction, we do try to come back up and push back higher, all right, and make some type of overall correction. But key thing is, can we get above this red SMA line again and hold past on Wednesday, Thursday? But I expect volatility to continue this upcoming week. Okay, so looking at VIXCentral.com, guys, the VIX is at 28, and that's fairly high. You want to typically see it at 20 or below to make sure that the markets are stable and that we're moving in a positive trend. This number here, you want in the positives. It's not that far off, okay, but you want it at like 1.5 or 2 or above that. You don't want it below this number here, all right? And if that's where we're at, you know that we have some volatility, you know that the markets are uncertain, and then we can take a look also at the fear and greed index. We've looked at that again before on the channel, so we could look at the fear and greed index. If you just type that in and you go to this here, and it's going to tell you what the market's overall. Right now, we're not even in extreme fear, guys. We're about almost 50-50 as far as some people thinking we're bullish or bearish. It's like we can't make up our minds where to go. So we could see more downside, but when you get an extreme fear, that's a good time to buy, because typically the market's going to start swinging back to the opposite direction. Okay, and you look at the put call option ratio, there's a ton of puts out there. People are going put a ton of puts, thinking that the market's going to continue in a downward trajectory, so that's going to play a part in what we see as well. And guys, if you're wondering how to make money on the way down from a market correction or a crash, UVXY, as you see here, the market's been going down, market's undervalued. When that happens, UVXY typically spikes up and gets to overvalued. So we were as low as about 13, we hit as high as 17. So when this thing starts moving, it can move. Just keep in mind, when the market starts correcting and starts going back up, this thing's going to fall right back down. Okay, it decays constantly over time, and then when it gets low enough, they basically do a reverse split, and we pop the price back up. Okay, like as you see here, it popped up to 63, and then it just constantly comes down with the occasional spikes in volatility. However, if we get above $22 on the UVXY here, it's something to keep an eye on, because you could start seeing it just spike and go extremely berserk if we see any more downside come Monday and Tuesday. So anyway, guys, be careful out there. Have a plan of action, okay, and just maybe have some cash on the sidelines coming into next week and beyond. I know a lot of people are selling out of their positions. Most of my positions now are all OTC stocks and aren't really affected that much by the overall markets. And I do have some Tesla that I am holding until after earnings, until hopefully it can correct. But that's also a risky play at this current time. So just be safe out there. Let me know your thoughts below and your plans moving forward. Other than that, we'll catch you in the next one.